Welcome to the Asset Coach and Tax Strategist YouTube channel. If you're a subscriber, thanks so much for subscribing. If you're a first-time viewer, thank you for spending your time here with us. If you like our content, please give us a thumbs up. For you new folks, Asset Coach Tax Strategist YouTube channel is based on the book Economic Termites. This is a book that I wrote a few years ago talking about taxes, inflation, time, laws and regulations. Also, I wrote a second book called Farming Assets. Those two books is really what this whole channel is about, addressing those situations and how they affect you and I in our ability to grow our wealth. So as an asset coach and tax strategist, my name is Robert Wolf. I am the CEO and founder of Terra Firma Business and Financial Consultants and its affiliates. We have a bunch of companies that we've built out this ecosystem surrounding the basis of what we talk about on this YouTube channel. So if you're not a subscriber, hit that subscribe button. We drop episodes every Thursday. Again, if you are, thanks so much. And let's get into this next episode. Today's episode is really kind of more about a lot of dialogues this time of the year. We're in the December, end of fourth quarter, last month of the year, end of the year, embarking onto a new year. And this is where a lot of people do their tax planning. A lot of business owners do their tax planning. And we've gone through 11 months and we've figured out, okay, do we have profit? What do we do? So do we have to make some business decisions to lower our profit so we don't pay as much in taxes? And that's kind of the shiny object in the room right now is taxes. I don't want to pay taxes. I don't want to pay taxes. What about taxes? And so one of the things I wanted to talk about was the IRS, your business partner, the IRS. If you've been a listener, you understand the relationship that we communicate about our partnership with the IRS. It's a business partnership. The government is a business. They generate revenue through the taxes, whether it's tariffs, whether it's income taxes, whether it's estate taxes, whatever the case may be. That is their revenue stream. So you may be a doctor and your revenue stream is medicine and whatever your specialty is. You may be an online sales store. Your revenue is whatever you're selling online. The government revenue source is tax dollars. Their job as a business is to protect its citizens and our way of living. Now, we a lot of times don't like how they're running the business. We don't like a lot of times how they're spending the money, but very similar to any other business, when you're running your own business, you have to take a look at your expenses. Are my expenses more than my revenue? Therefore, I have a loss. My cash flow's low? How long will I survive with this low cash flow? Or I have a lot of leftover revenue from my expenses. So I have profit. What do I do with this cash flow? What do I do with this cash flow? How do I redistribute? Do I put it back into the business? Do I look at other products or service to add to my business? You get the idea. So the reason why I'm talking about this is that so many people look at the IRS, they look at the tax code from a 2D perspective. I did a whole episode on the IRS tax code, a 2D versus 3D. I highly recommend reviewing that episode because the reality is here's the key, the intent of the tax code is to generate tax revenue, but it also gives us rules and guidelines. Okay, so it's very, very important to understand these rules and guidelines of what is available to us. Now, what the IRS also doesn't like is when people try to promote certain tax benefits that the government, the IRS gives you, and they're promoting these tax benefits to the general public, and that is the strategy that they're presenting. And there's a couple reasons why. It's not because it's going to reduce tax revenue, please. That has nothing to do with it. What it has to do with is more of the negative intent of the promotion of the tax code, and people who don't necessarily qualify for that area of the tax code now think they qualify for that area of the tax code, and therefore they do it because somebody was promoting it. That is the intent. It is designed to protect the business as a whole and the revenue stream as a whole. Now, you may agree or disagree. At the end of the day, that's the reality of what this is. It's the intent. And the reason why I say this is because if you ever read parts of publications and the tax code, the IRS says you may be able to. Generally, you can. And so I think it's really important for us to understand that in this process of understanding this, in this process of understanding the intent of the tax code, in this process of understanding what I am supposed to do in this relationship, in this tax code, it's very important for us to understand what this looks like. Now, the reason why I'm bringing this up is very, very significant, because when we're looking at the possibility, or when we're looking at the reality, when we're looking at the necessity of utilizing the tax code, but us having to file our own taxes, we work with so many accredited investors, high income earners, whether they're doctors or successful business owners, and they come to us really because their intent is to lower taxes. That's the reality. That's their intent, is to lower taxes. That's the shiny object in their room. They come to us for that purpose. But here's the interesting thing. When you go through this process, if you run and think about it from a partnership relationship, and you're thinking about it as a business, what is my intent? My intent is to lower my expenses. Taxes are an expense line of our lifestyle. Just like a mortgage payment, just like gas for the vehicles, just like rent for a office location, just for like marketing for a business. Okay? It's very important as we go through this to understand that as we go through this understanding of the intent, the understanding of what the IRS is trying to instill and understand, the motivating factor is the tax code is written for business owners. And if the tax code is written for business owners, what that means is that you and I need to understand that if I want to lower my tax revenue, then I need to do what? I need to make business decisions. I need to understand what's creating my taxes is my forms of income. And if it's my forms of income, then what kind of income am I generating? What's the tax liability for that particular income? And I need to make decisions on that. Okay? So this is important to understand. Because when we look at the intent of, I want to make business decisions, you may be thinking, I want to lower my taxes. But the reality is the tax code's written for business owners because the government wants you to generate revenue. They want you to be successful. Most people come to us with the mindset that the government, the IRS, doesn't want you to be successful. No, they want you to be successful. They want you to create revenue, so much so that you have to hire employees. That payroll tax, those income taxes is what the government needs. That's their revenue stream. Why would they try to hurt you in your business? Now, there are certain types of situations where regulations and laws do come into place where the business of government makes bad decisions that affects that revenue stream. And this is a lot of that monetary and fiscal policy decisions that politicians battle. Whether you're a Democrat, whether you're Republican, whether you're independent, okay? This is where we all differ, is understanding this. But in the reality of this is every business can only survive on cash flow. The government misaligns their understanding sometimes in some political decisions that because they can print money, because they can borrow funds from other countries and citizens in treasuries, and that's how they raise funds also, they forget that they're a business. And they need to look at cash flow. They think they have an unlimited supply. And we're at that point now where a few decades of these decisions continue to make the business of government more and more expensive. So creating a new revenue stream like tariffs is very important. Creating a understanding of interest rates, creating an understanding of liquidity in the system is very important. Okay. Now, the reason why I'm bringing all this up is that we have clients that do research and they come to us and they say, "Hey, Bob, well, you know what? You guys are representing, or you guys are suggesting this particular strategy, and I don't necessarily know if I understand it." Well, that's perfectly fine. You don't have to understand it, right? It doesn't make sense to me. Most of the time, when I hear that, that is somebody with the mindset of an employee mindset, not a business owner mindset. So one of the things we strive for with our membership is trying to educate and teach them on the business side of things. Yes, they may come to us as a very successful employee, making a great income, but they have the employee mindset of, oh, I go work and I get a paycheck, and then I live my lifestyle and I just have to pay the taxes that I have to pay, which is true. But you can also make other decisions like business owners have made, where they actually started off with a business. You may have started off as a W-2 employee. They may have started off as a business owner. The revenue stream, the income stream, the cash flow stream varies and is different. In fact, I'm going to share my screen and I want to show you a couple things here as I go through this process of explaining that the IRS is very specific on what they entail. So for example, publication 535, business expenses. So this is based on 2019. They renew this yearly depending on what changes occur. But I highlighted a few things. Now, if we look at the table of contents, business expenses for a business. Okay? Employee pay. Oh, that's a deduction. That's an expense for a business. So a business earns revenue when they pay employees, that lowers their cash flow, meaning their profit. Okay? But what does that do for the government? Increases revenue, employee pay, rent expense, interest expense, taxes expense, insurance expense. You can see a few of these different expenses. Now, I highlighted insurance because I want to make sure that I surround ourselves with some education of what we hear or what we see when we research. What I mean by this is that you and I as employees or you and I as business owners, we go and research on ChatGPT now and we look up tax ideas and tax code and is this real? That is the 2D search. You're missing the intent. You're going to get an answer from that and you're going to actually keep getting answers the more you dig deeper and deeper. But here's the interesting thing. There's no human intent in those questions because you don't know those human intents. Your goal is not to pay taxes. But our goal at Terra Firma and what we try to do with our members, our clients, is help them build a business, help them grow a revenue. Why? Because that's how the tax code is written. The business expenses, you get to deduct these. There is no publication that says personal lifestyle spending expenses. No, you get Schedule A, itemized deductions. That is your personal 1040 deduction. Now, you may have Schedule D, capital gains. You may have a loss, but you're only able to write off a loss of $3,000. You can make as much as you can on a capital gain and they'll tax you on that. That's unlimited. But on a loss, they cap it at $3,000 a year. Now you can carry forward your loss to future years, but you can only write off $3,000. This is important to understand because when you're researching and getting 2D results, the intent for us is, and a lot of tax strategists, the intent is to help you build a business, utilize the legal system, entity shifting, entities, LLCs, S corps, C corps, partnerships, trusts, These are all separate structures and entities that the government gives us as a legal system to separate liability. But this also gives us the ability to utilize accounting and the tax code from business expenses because the tax code is written for business owners. So the intent is to try to make money. That is the motivational goal of the IRS, the government. Try to make money. They don't say you have to make a profit. You need to try to make money. And the more you try, you eventually become successful. That's why we're able to take these expenses and write off. So I'm going to go through a couple things here, and I've highlighted this section. This is chapter 6. And the reason why I've done this is because I find this very interesting. This is written in black and white. And this creates a lot of uncertainty even in the CPA, financial planning, insurance professional world. So, deductible premiums. Okay? You generally can. You generally can. What did I say? The IRS, when they write the tax code, they create some vague wording because they're focused on intent. You generally can deduct premiums. You pay for the following kinds of insurance related to your trade or business. They're not saying you're only allowed to. There is no exceptions to. They're looking at intent. How are we reporting this as a business partner? So number one, insurance that covers fire, storms, theft, accident, and similar losses. Credit insurance, group hospitalization or medical insurance for employees. Liability insurance, malpractice or E&O insurance. Workers' compensation insurance. Overhead expense for disability. Car and vehicle expense insurance. Here's where a lot of people stop. They don't go to this top right corner. Well, I'm going to go to 11, then I'm going to come back to 10. 11, business interruption insurance that pays for lost profits if your business is shut down due to a fire or other cause. They could have stopped it at just fire, but they left it as other cause. Intent, business interruption that pays for lost profits. Okay, now what's number 10? Life insurance covering your officers and employees if you aren't directly or indirectly a beneficiary under the contract. Do you realize about 95 to 98% of the CPAs, financial planners, and insurance professionals don't understand that this is here in this publication? They tell you you cannot deduct life insurance premiums, but the IRS says you can. You can deduct. Okay, let's look at this. Let's start from the beginning. You generally can deduct premiums you pay for your following kinds of insurance related to your trade or business. Life insurance covering your officers and employees if you aren't directly or indirectly a beneficiary under the contract. What are they saying? You need to have a separate entity like a trust to be able to be the direct or indirect beneficiary of that contract. That's it. You can't own it personally and get a deduction. No, that's what it's saying. It's intent. And this is the thing that is really hard for a lot of people to understand when they've never been in the business world. Is wrapping their mind around, oh, I can tell my own story and the government, the IRS, wants me to, but they give me guidelines. Think about sports or a game or even the game of chess. If you don't know the rules, how in the world are you going to even play? If you don't know the rules, then okay, so then you know the rules. And you're playing with somebody else who knows the rules. Then what? Well, then you got to strategize. You got to use your understanding and experience of playing the game to create strategy to outwit or to be able to beat the person on the other side, your competition. Think about Battleship. Same thing with Battleship. Have you ever played Battleship? You know the rules. Think about how you if you haven't played Battleship, go buy Battleship and play it with your spouse or with your kids and see how simple that game is, but how much strategy that you're thinking about hiding your ships in the same space that your competition has, and you're trying to sink each other's ships by saying one space at a time. And then when you hear hit, ooh, then what do? Then you got to try to figure out, okay, which direction is this ship so I can keep hitting it and then sink it. Right? That's the intent. But you can't strategize unless you know the rules of the game. It's the same thing with the IRS tax code. It's the same thing in running a business. You got to understand the legality and the intent. What's your goal? What is your business partner, the IRS, want you to do? If they wanted you to fail, they would not give you so much tax benefits and so much ability to reduce your tax liability as a business owner. They're just not going to tell you how to do it. The strategy's your responsibility. So, for example, I have an option. If I play basketball, and let's say I'm in high school, I have choices. I can decide to join the high school basketball team and play. And if I do so, who's there? A coach. The coach is there to help me play in a system that the coach believes is his strategy with other players. And my position in the sport or in the team is a certain position and certain role to help the outcome of the strategy be successful. Then once we've trained, we've practiced, we've learned how to do all this kind of stuff, then we go play against competition. And we're being challenged to our strategy as we're challenging their strategy. We all know the rules of the game, but there's always a referee, because every once in a while, what do? We foul, or the ball goes out of bounds, or there's a, oh, that's right, timeout. Why do we usually call timeout? To strategize. So think about this. Now, that's if I were to join a high school basketball team. But do I have to? If I like to play basketball, I know how to play basketball, what can I go do? Oh, I can go play a pickup game. I can go to the local park and just jump right in and play a pickup game. Not knowing most of the guys there, gals there, playing, not really any kind of strategy because there's no coach, there's no overall strategy. And what's happening? We're all just kind of playing our own thing. This is what happens with most people who don't understand the 3D aspect, the intent of the aspect of the tax code. They're out there playing a pickup game on their own and trying to figure it out on their own. And this happens a lot of times with W-2 employee type mindset. And I'm not saying that you can't be trained. I'm just saying no one's ever trained you in the other mindset. You're playing a pickup game. Sure, you know some of the rules, but you're just going to kind of do what you need to do to kind of have fun. And then when you're playing against players that are way better than you, you're not having fun. It's frustrating. That's you in your 1040. That's you in your current CPA if they're not a strategist. But then if you decide that I'm frustrated with that, I want to go and I want to work with a team. And I want to have a strategy. I want to have the intent of creating a winning opportunity, a winning strategy with the intent to succeed. This is the difference of viewing and looking at the tax code, viewing and looking at really business in general. Why some businesses are successful and some are not. Sure, there's some luck. But the reality is that you increase your level of success with the people around you and with your understanding of what you're going into as a business. People come to us because they've already are successful in generating a good amount of money to where their tax liability is higher than what they want to. They're investing in their retirement account. They're investing in real estate. They're investing in cash value life insurance. They're investing in all these other things. but all their tax liability keeps going up. They're like, I'm trying here. What do I do? This is when you got to upgrade your team. And the intent is always to follow the guidelines and the legality of the legal system as well as the tax legal system. Utilizing that guide, that rule book of what we're allowed to do. But like I showed you, the IRS tax code is written with the ability for us to give the IRS our story and our intent. And then if they don't agree, or we don't have proof and evidence of the intent, then that's when a whistle blows, there's a foul, you get to shoot 2 free throws. Okay? So we want to stay within these guidelines and show this intent, but it's a moving target. We file taxes annually, so we think everything is a calendar year. No. And the reason why I say no is because what do they get, the IRS lets you do? File an extension. You don't have to file right at March 15th for a business and April 15th for an individual. You can file an extension to September 15th for a business owner, October 15th for a personal tax return. And you have, all of a sudden, you gave yourself more time, a longer runway to be able to communicate to your business partner, the IRS, of what happened last year. Well, if you file your taxes on October 15th, the 10 months have gone by already. We're already thinking about the end of this next year. So it's a moving target. It's an evolution. It's a flow. In year over year, that flow gets communicated to the IRS of how we performed with the idea and the intent of what we're going to be doing the next year. It is a dot to dot, and we have to connect each dot to create the picture. And if we're not, and we're just focusing on one dot or a group of dots, we're missing the big picture. It's our job to communicate the big picture to the IRS. It's our job to connect the dots of what we're doing. They gave us the dots. Now we got to connect them so they understand what our relationship, our partnership, us and the IRS are looking to do, what our intent is. This is the 3D aspect of what I'm saying with the tax code. But you're welcome to go and search ChatGPT, tax things, and you're going to get 2D non-intent language, which is not really what the intent of the IRS tax code is. So you're actually working against yourself. I'm not saying don't research things. Don't dig your mind into that as being the final answer. I work with a lot of doctors. And one of the things that doctors are really frustrated with and have been is people come with their own research, right? And which is great. You can go on the internet and you can WebMD your diagnosis and you go to your doctor and say, here's my issue. And what happens? The doctor looks at that and says, okay, that's interesting. What are we going to do? We're going to run tests. And let's see if this is really real, what it is. And with those tests and with that relationship with your doctor uncovers a diagnosis that may be different. Now, the symptoms may still be the same, but the actual diagnosis is different. What happens if you went and self-treated on medication that would be over the counter because you couldn't prescribe your own stuff, and you try to figure out home remedies to self-medicate, but the root cause, the real diagnosis, is wrong. The symptoms are the same, but the diagnosis is wrong. You can actually cause more harm. And that's what happens when we try to research the tax code and we get 2D. What is necessary is to say, okay, here's my research. How do I understand this more? And you have to have the right doctor, the right team to be able to help run the diagnosis of what your situation looks like. So a treatment plan can heal you. So a tax strategy, a business strategy can heal you, can create the intent of what you're trying to accomplish. So I know this was kind of some of what me rambling, but this is just, I'm having hundreds of conversations this time of year with so many different personalities across the country at different levels of success and mindset and personality. And so all of this stuff just kind of was building up in my mind. And I felt like I had to share this with you in one avenue as to what I see and what we need to be, how we need to be kind of wary of our own personal actions. Our intent is correct in wanting to research and know, but we can't self-diagnose because that ends up causing more harm, meaning that you'll probably always overpay taxes. When the IRS, that's a win-win for them. They don't care if you overpay taxes. They're fine with that, but they're also very fine with your success and you as a business owner and the intent and grow other taxpayers, other revenue streams for the government, which is increasing more taxpayers. That's the key. If you like this content, please give us a thumbs up. If you haven't subscribed by now, hit the subscribe button, add some comments down below. Thank you so much for joining us. I appreciate this. Go make it a great day.